Welcome. I'm here with Jeff Weber of JJJ Investing Services. My name is Brett Hofstadt, his business partner. But today we're going to talk about how to use AIM investing with stocks when a person holds a large number of shares of a particular stock. And you don't want to use options. You just want to have the stock, but you want to do better than just buying and holding so you can profit from ups and downs in the market. You can benefit from the dividends if it's a dividend earning stock. And it also might not be able to use the stock when it goes up and down by a large amount in the price change, but there's still a way to benefit from AIM investing. So, Jeff?
Thank you, Brett, for the nice introduction. One of my investors who owned a bunch of options gave me a good challenge because I asked him to send me his portfolio so I could take a look at it and see if I could, help him with stocks he already owned. And one of the ones he sent me was Altria, the symbol for which is MO, M-O. You are looking at his spreadsheet, MO stock, that I was able to invent for him. He was the first guinea pig, as I would like to say, for using AIM with a stock. Now you see at the very top in bold, he started with 5,200 shares. Now the first thing I told him was, hey, you own a stock that also has leaps. Mo has leaps. So I said, would you like to sell your stock and buy the leaps on Mo? And he said, no, I want to own the stock because it's paying an 8.5% dividend. So I'm, roughly $1 a month. So at the start at 5,200, getting $1, he's getting $5,200 a month in dividends. So he was very happy with that. I said, well, you have given me a good challenge. I'm going to figure out a way for you to use AIM with stocks because you own so many. And so I came up with two significant changes to AIM that were very simple. Again, I love the KISS principle, so I keep everything simple. And what I did at first, he started at $42.39 a share with 5,200 shares. And what I decided at the time, because stocks are not very volatile, as you can see, if you scan down the stock price column, you will see in 14 months, the stock has gone from $42.39 to $45. Not exactly a gigantic leap, pun intended, not even 10%. Okay, now, based on the fact that stocks are much less volatile, I came to the determination that we would only need about 1/3 cash, and that you can see that's more than generous. I think you could even get by with a little less, probably could get by with 75,000 in cash to start rather than 100,000. But since I didn't know what to expect, I said, let's go with the 100,000, because now brokers, even if you leave the money with a broker like Fidelity, you're making 5% a month on your money in the money market of the broker. So the 100,000 is still making you 5% a month, 2,000 a month. I think that is. So it's a benefit. You're not leaving your money dead, not making any money on it. Okay, so let's go through what I did. Okay. Now, if you're a fan of regular AIM, my basic trading principle with leaps is buy 25% lower on the first buy and sell 35-40% higher on the first sell. So for example, if you bought a stock at $100, your first buy would be at $75, and your first sell would be at, say, $135 or $140. Now, that kind of spread will not work with stocks because, as you see, they are not that volatile. So I came up originally with using a 5% safe instead of the leaps 10% safe. Well, after a few months, I decided even that was too high to use for safe. I wasn't selling or buying enough at the time. So I thought to increase profits, I would go to a 0% safe. And you can see when we were using the 5% safe, we only got one sell at sold 270 shares, and we got one buy for 300 shares. You see that? Once we switched, and you see the safe column go to 0 in 3/13/24, now since 3/13/24, in 2 months, we've had 3 sells and 1 buy. So that was a good improvement that will lead to more money in the future. Now, that's why you see at the top, you see buy-sell advice of 27,271, and you see a market order sell for 12,860. Now, here's the way to figure that, okay? How much profit did he make? Okay, roughly a $5.11 profit per share. So multiply 511 times 270, and you made a very nice profit. 5 times 270, it's about $1,400 profit. And believe me, that's more profit, even though now you have 270 less shares earning dividends, you still made a quick $1,200 profit. And you can see 2 months later, and I'm only doing this, when you see the dates, that is the date something happened, a buy or sell. And also, early on, I was doing it, I would review everyone on a monthly basis too. So, long story short, you can see portfolio control held very, very, very steady, because basically you only adjust it, just like with regular AIM, with leaps, you only adjust your portfolio control when you have a buy. That's
Okay,
why.
So Jeff, so instead of waiting for a 20% to 30% price change, what was your price change here to determine a buy or sell?
At first, it was 5%. So, for example, if you bought something at $50, your next buy would be at $47.50, not 25% lower, roughly 5% lower. And your sell would also be 5% higher. So if you bought it at 50, your sell would be at 55.
Okay, so and that's what you would see with these numbers here at the stock price. These correspond to about a 5% change. That's what
right. Yeah, anytime you see a buy or sell, I mean, you can see, look right above the sell, the buy for 300. You made a buy for 300 at $40.06. Look at the price right above it, 44.62. So it had the 5% drop right there. And so we bought, and look how that paid off. We bought 300 at $40.06. A couple months later, it's up to 42.06, and we get a sell at 77. So you made a $2 profit times 77. So you're going to get profits in the hundreds of dollars, but it's better than no profits at all. And if you want the bigger profits, you need to do leaps or long-term options and not stocks. But I know not everybody is comfortable owning options. So if you have a large enough number of shares of stock, and I think roughly owning 500 or more shares is about the entry point to think about using AIM with stocks. It's obviously going to be better with 5,200 like you see here. And a lot of people own those kind of stocks. And if you're just a buy and hold investor, I would suggest that this is an excellent way to add at least 2 or 3% profits per year that you'll be compounding over the long term. So it will lead to a much higher result in 10 or 15 years.
Okay, great. So thanks. That helps explain a lot of answer questions I think people will have. Now, how about this? Can you explain the what happened here with this note, the loan of 20K to Microsoft?
Oh, yeah. I do model portfolios in my newsletter. And at one point, Microsoft got very low and I needed to buy more contracts on the Microsoft. And I looked at my cash here. Look at the first 7-8 months. You started with 100,000 cash. At the time I loaned it, you still had 97. You still had 117,000. Your cash had gone up to 117,000. So I said, it's obvious to me I don't need to be this generous with cash when I'm doing AIM with stocks. So I loaned Microsoft 20,000. I reduced the cash in here by the 20,000, and you can still see the cash went from 117,000 to 97,000. But look how the cash has gone. You went from 97,000 to 104,000. So it caused no harm to this stock that you're doing AIM with to borrow 20,000.
Okay, so it moved into another portfolio basically.
Right. Yeah, because because as far as your broker's concerned, you have one money market account if you own 5 or 6 stocks and leaps. And so he doesn't care where the money is, as long as there's some of it in there from somewhere that you can borrow from.
And maybe let's just repeat, if this is the first time you're learning about AIM investing, one part of AIM is keeping a portion of your portfolio in cash.
Right. The basic principle of AIM with leaps is to go 50% leaps, 50% cash. So if you were starting with 100,000 on a leap, you would have 50,000 cash and 50,000 worth of leaps.
Or stocks.
Or stock. No, with stocks, you really don't need to go 50-50 because they're so conservative and so not volatile that you can easily go with 1/3 or maybe even 25% cash when you're doing AIM with stocks.
Okay, but the point still is you need some.
You need some because the whole principle of AIM is to buy low. And how can you buy low if you don't have cash? So plus you're always putting less of your money at risk because you're only putting either 1/3 or 1/2 of your investing amount at risk by owning a stock or a leap.
Yeah, and so I would imagine for most people that have hundreds or thousands of shares of a company, they are probably risk averse. But that's why AIM is a great method, even
right, because
for people, right?
And the other advantage of this is if you're doing AIM with a stock, you don't have to roll it over every year. Because the basic principle with leaps is new leaps come out every September in the middle of the month. So along about October, November, all my investors who have leaps on, doing AIM with, I'm going to have to roll theirs over. This one just keeps flowing along like a river. You don't have to ever do anything other than pay attention and see if you got to buy or sell. And most brokers will send you an email or some kind of a text notice or something to let you know if you have a buy or sell. And again, we're doing the same thing with the stocks that we're doing with the leaps. We're going to I think we scrolled down. Let me see.
Well, how about can we get to the end here, Jeff, of the spreadsheet and talk about the conclusion?
Right, yeah. Can you go down to, again, the same principle I follow with leaps, I follow with stocks. You always have a buy and sell figured out now based on a 5% lower price for the buy, and you see how the buy is at 42.75 and the sell is at 47.25. That's a 5% difference between what the price of your last buy or sell was.
Okay. Now, how about though? Let's wrap up after the year and 4 months or so.
Yeah,
At the tracking here.
Now you have to realize I am not. He is making roughly a $5,100 a month dividend on this stock. Okay, because he's making. He told me this stock is paying him 8.5% a year. I looked it up. It's roughly paying $1 every quarter. So 33 cents a month. So 5,200 times, let's just say 33 cents. He's making a $1,716 a month dividend on this stock. I did not factor that in. So if you go 1716 times 14 months that shows on this spreadsheet, he's made an additional $24,024 in dividends that I haven't recorded. Now in the future, if you want me to do this for you, I'd be glad to. I'm going to put the dividends on the spreadsheet, and I will do that for you, so you will get a complete picture of what you want. So now if you look at the very top in the last column, the portfolio total, you see we started with 330,405. The value of just the stock has grown to 344,385.
Yeah. And the reason, again, there's $20,000 missing here because you subtracted it.
Right, because and I knew I didn't need as much cash, because with leaps I use 50% cash and 50% leaps. I thought a third would be a better roughly amount. So you see, I started with 220,000 in stock and 100,000 in cash, and you can see that 100,000 is not needed really. I could have probably started this with 75,000 or maybe even 50,000, and I'd still have plenty of cash left in there. But the nice thing is, it doesn't hurt to have a little extra cash, so you don't ever have to worry about it. Plus, your broker, at least Fidelity, I don't know what the other ones do, Fidelity is paying a 5% dividend on your cash balance. So if you start with 100,000 every month, Fidelity is going to be paying you a $5,000 dividend. That's not too shabby.
So Jeff, can we then let's finish up and just explain now the benefits of using AIM with the stock and all these shares versus if he had just bought and hold for the duration.
Right.
So tell us.
With buy and hold, you're only going to get paper losses and paper profits. And since even stocks fluctuate, but much lower volatility level than leaps, take advantage to make an extra 2 or 3% a year, because that adds up over time. If you make 3% a year for 15 years, you've made an additional 45% profit on your stock. Plus, the beauty of AIM is that you're always compounding. So now, for example, and you get to the point where you could probably buy more shares of stock with the profits you've made from AIM and from the dividends you're getting paid. So I'm guessing, and if he continues with this for 10 years, I bet he owns way over 10,000 shares of stock. He'll double the dividend amount he's getting, and it keeps growing from there. So in another 10 years, he'd go from 10,000 to maybe 20,000. So think of it like work. You know, if you work for 40 years, you used to get a pension. If you do AIM for 40 years, you're going to get a hell of a lot of money, and you're not going to care that you're not getting a pension anymore. This will take care of you and give you the retirement you deserve.
Okay, thanks, Jeff. So, but also, is it fair to say his ending portfolio value here benefited from these trades, the buys and sells?
Oh, yes, of course, because think about this. AIM has one great principle that never varies. 100% of all sells on leaps or stocks are profitable. And I give you the quick example here. Okay. 47.6, you sold 270 shares at 47.63. You had bought them at 42.39. That is roughly
What's that?
a $5.34 profit. So if you go $5.34 profit times 270, on that sell, you made a profit of $1,441.80. That's pretty good. And you did that in 2 months. So now you've reduced the number of shares from 5,200 to 4,900. But look what you did 2 months later. Aren't you glad you sold 270 at 47? Because 2 months later, it dropped to $40.06. If you hadn't sold those at 47, you would have lost that $1,400 profit. It would have only been a paper profit, and it would have gone away. And you acquired more shares at a cheaper price, 300. And again, you know, you see how that works. Now so it literally, you started at 5,200 shares. 6 months later, you now have 5,306 shares, more than you started with, and you were able to buy them at 40. You had the original ones you had to buy at 42.39. So, you know, I can't see what isn't to like about doing this with a stock. Now, it wouldn't make sense to do it with 10 or 15 shares. I'm sorry, you know, that's a whole different world. This favors wealthier investors, but they have a right to make as much profit as they can also. So I would love to help anybody in this position where they own a couple thousand shares of a stock by setting this up for them and teaching them how to do it themselves.
Okay, great, Jeff. Well, tell people what's the best way to get in touch with you if they want to learn more about.
Oh, yeah. If you want to get in touch with me, you can email me at jeff@jjjinvesting.biz, B-I-Z. That's that email. You're also welcome to phone me because I do this full time. I have an Apple smartphone, so I carry it with me everywhere. So write down my phone number, which is 210-478-0655. And I'd love to add you as a client, just like my friend Gene here, who owns the most stock and is very happy with his returns. And basically, think of it, in 14 months, his total has gone from 320,000 to roughly 361,000 when you add in the dividends he's earned along with the profits AIM has made him. That's like 20% in 14 months on a stock. That's pretty good.
All right, great. Well, thanks, Jeff. And we'll wrap it up here. So thanks very much for explaining about AIM for people who.
And I'll just leave one last message. If you want to get a lot more information about AIM, including the course, a 9-hour course I created to explain AIM investing, go to my website, jjjinvesting.com, and look at the top, and you'll see a 5-minute video I did explaining the course and see if this looks like the kind of course you'd be interested in. I'd love to have you have it.
That's great. Yeah, the course goes from start to finish with AIM, and you're
And
the
it
only.
teaches you a lot of good tricks about using Roth IRA to avoid paying any taxes on these returns. Because why do you want to give the government your money, you know?
All right, well, thanks, Jeff, for all your help with AIM investing, and we'll talk more in another video. Okay.
Okay. Look for more videos. I have a lot of videos on my jjjinvesting.com site. So you can learn about leaps using AIM and many other things for free just by going to my website, jjjinvesting.com.
Right. And if people are watching this on YouTube, look through the YouTube channel, you'll see more videos there. So,
Right.
yep. All right. Thanks.
All right. Thanks, Brett, for your help.